Football is one of the most popular sports in the world, with over 5 billion fans around the globe and a seemingly endless supply of tournaments to keep football fans entertained. The most prestigious football tournament in the world is the FIFA World Cup, as it appeals to a worldwide market. Its reputation alone provides great commercialization value, and the industry can be considered for investments. Hello and welcome to another episode of Do Academy. Today we are asking the big question, is the football industry worth investing? According to the latest football market research, the global football market size has reached an astounding $3.2 billion in 2022, and is expected to reach $4.0 billion by 2028. The football industry is huge as it is not just limited to football club stocks that are traded on a public stock exchange. It includes the associated companies like broadcasting companies, Fox, NBC, SKY Sports, along with club sponsors, Coca-Cola, Nike, Adidas, Macron, Socios.com and more. Hence, investors who are interested in buying shares have the option to choose within the football tech partners, sportswear companies, beverage companies and so forth. With such a huge market valuation, it is no surprise that it comes with a long list of well-known stars and big companies who have invested in it. One of the NBA legends, LeBron James, acquired a 2% stake worth approximately $6.5 million in Liverpool FC back in 2011. According to Forbes, Liverpool has since won the UEFA Champions League and the Premier League respectively, boosting the team's global value to over $4.1 billion. The club generated an annual revenue of up to $619 million based on the figures for the 2019-20 season. Due to the outstanding achievements from Liverpool, LeBron James held onto his minority stake for more over a decade. The stake price has since increased drastically from $6.5 million to nearly $44 million, as per a 2021 BBC report. Recently, James has reportedly relinquished his shares in Liverpool and made an estimate of $43.5 million profit. One of the key factors of a successful investment is having the right mindset that prioritizes long-term success over short-term. Being a FIFA World Cup partner or sponsor is one of the many smart investments a corporation can make, as it is one of the biggest influences that enables brands to increase brand exposure on a global scale. While Chinese brands are the biggest spending sponsors at the 2022 Qatar World Cup, they have spent an eye-watering $1.395 billion. Among the three main FIFA partners is Wanda Group, the first Chinese company to sign up as a FIFA partner since 2016. This grants Wanda the highest level of sponsorship rights, which includes the next four FIFA World Cup editions with global rights to all FIFA events. According to the Wanda Group's official website, Wanda Sports Group's revenue in 2018 has increased by approximately 22.9% to $8.83 billion due to the association with the FIFA World Cup that year. In addition, the owner Wang Jianlin said that they've faced a bigger revenue growth in 2018, especially from businesses overseas. As a FIFA World Cup partner, Wanda Group will receive a huge amount of revenue from broadcasting copyrights as well, since the cost of television broadcasts are on the rise. There are plenty of examples of well-known stars and big companies who have invested in the football industry. However, as a beginner-level investor, you need to know the factors that affect a company's stock price before you embark on your investment journey. Stock prices are driven by a variety of factors, including company management and performance, global economics, industry trend changes, market sentiments and global events. The same applies for the football industry. The results of games, the signing or resigning of players, the scandals and such will affect the prices of football stocks. For example, if a team was in good form on the pitch and proceeds to win a tournament, you will notice an increase in stock prices. As opposed to the team's performance, stock prices would also be affected when a team sells a star player, typically resulting in a drop. This is a common market reaction because a star player would naturally increase the club's revenue, which ultimately drives a company's share price upwards. It is also common for scandals to ruin the career of a player, affecting the club's stock price in the process. In a nutshell, investing in different industries may sound appealing to many, especially if the industry in question boasts huge numbers pertaining to its revenue and valuation. But always remember that nothing is guaranteed in the stock market. Investors should always be vigilant, conduct research and stay up to date with the latest news before committing to an investment. Thanks for joining me today. Be sure to like, share, and subscribe for more actionable investment insights now.